everyone. I'm CA PhD Kapil Thakur. I'm consultant to Big Four and National Stock Exchange. I have 29 years of experience. Hello everyone. Today we are going to discuss financial system and financial markets. The topics which we will be covering will be introduction to financial system, structure of financial system, participants in financial system, and types of financial markets. All of you are aware of how important it is in these type of discussions, because what is financial system is the first question that will come to your mind. And please remember this, it is finance which makes all economies grow. It's an oxygen. Whether it is US, China or India or Japan or Germany. I'm taking the names of the 5 economies, and that's where that financial system plays a very important role. We are seeing in 2024 rate cuts happening. Why are they happening? Why are the economies cutting the rates? What's happening? And all these things are the answer is financial system. A financial system is all about money, money and money. When you say money, it definitely the system which transfers money from surplus area to area of deficit. That's what financial system is. In short, it is the meeting of lenders and borrowers. It helps you mobilize the funds. Lenders keeping their money will not be happy because they will not get any interest. They will not get anything. And the people who are capital users, the borrowers, will be worried if they don't get money. And 2024 has been a fantastic year for financial system. We saw Ola Electric coming with IPO. We saw Bajaj Housing Finance breaking all the records. 350,000 crores collected is a record by itself in India. A small company like Resource Automobiles having 8 employees and 2 showrooms collecting 4,000 times in IPO. This is what financial system is. It shows India is moving. The 5th largest economy of the world is trying to move to the 4th or the 3rd. And as Geeta Gopinath of International Monetary Fund says, it's high time we see India as the 3rd largest economy, surpassing, with due respect, Japan and Germany. So then the new order of the world will be US, China and India. I call that UCI. U, US, C, China and I, India. And we are not far from that situation. If we ignore this, or the world ignore this, then UCI can lead to ICU. Because the problem is, these are the 3 economies which are leading from the front. So never be happy reading US in recession or China in recession. Because India needs them, they need India. There's a proverb which says, sums up about these 3 countries. You love me or hate me, you cannot ignore me. When financial system is in the place, it is all about expansion. It plays role in capital formation. There are so many participants, there are markets, there are products, there are services. And geographically now, as K.V. Kamath sir of ICICI says, world is in your pocket. We have regional, domestic and international presence. In financial system, as you can understand, there are lenders, there are savers who are having surplus money. They are the households, they are the business people, they are government also, they are foreigners, they may be FDI, FII, FPI. Investors can be retail investors, they can be HNIs, they can be ultra HNIs. Now here I like to tell you what is retail investors. It is defined by SEBI in India. The retail investors are the investors who can invest up to 2 lakh rupees in IPO. Who are HNIs? It is also defined people having net worth of more than 5 crores. And who are ultra HNI? people having net worth of more than 25 crores. India is growing in ultra HNI, Mumbai leading from the front. Please remember this year one more thing, that in world they don't talk about HNI and ultra HNI, they talk about super rich. And how many super rich are there in the world? As per the latest list, 15. It includes, we should be proud of, 2 Indians, Mukesh Dhirubhai Ambani, Gautam Shantilal Adani. And the coincidence is, both these lenders, you can say, are about to step down between 2027 and 2030 to have the next generation in the place. Coming back to our financial system, where if lenders and borrowers meet directly, we call it direct financing. And who are the spenders? Again, there can be corporates, there can be government, there can be various other people. You can take a loan also, so household can be on both the sides. Business can be on both the sides. Businessmen with surplus money can invest, and companies which require money will borrow. Unlisted company, when comes for raising the capital in the market, it is called IPO. And when listed company comes in, it is called FPO. Government may need money for short term. Foreigners also may need money. We are seeing Hyundai, or as in Japanese accent they say Hyundai, coming with IPO. It has filed a DRHP, draft red herring prospectus. And it will be the largest IPO, surpassing LIC of 21,000 crores. Hyundai Motors has filed DRHP for 25,000 crores. That's why we have mentioned on the borrower side even foreigners. If there is a direct relationship between lender and borrower, it is called direct financing. But if you require an investment bank as an intermediary to manage everything, which is very, very popular nowadays, it is called indirect financing. Direct financing has only 2 parties. They are called bilateral contracts. Indirect financing has 3 parties: borrower, lender, and certainly we have an intermediary, IB, investment banks. So that is what about is the financial system. And we can now move to structure of financial system. Structure, it's called a pentagon. Pentagon means 5. We have 5 main components in financial system: financial participants, financial market, financial instruments, financial regulator, and financial services. We need to understand each of them: financial participants, financial market, financial services, financial instruments, and of course, financial regulators. When you hear the word regulator, you must understand they regulate the markets. Here you see them on the chart. Financial system has participants, markets, instruments, regulator, and services. It's called pentagon. When we look at financial participants first, they involve the most important backbone of the system, investment banks. Investment banks are the ones which have a strategic advisory function. Then there are retail corporate banks. You can also call them commercial banks, which has government banks, which has private sector banks, which has cooperative banks, which is foreign banks. Then we also have mutual funds and hedge funds. We have government, who is a stakeholder. We have stock exchanges. And then, of course, we have depositories. We'll be discussing these terms subsequently. As regards the other parts are concerned, stakeholders are concerned, there's retail investors, there is insurance and pension companies, registrars, payment and settlement systems like SWIFT, NEFT, SWIFT for foreign payments. For India, we have NEFT, RTGS, IMPS, clearing houses, brokers and dealers, which includes even prime brokers, and of course, custodians. Then there is, we are talking about further financial market. Financial market can be subdivided into capital market, money market, foreign exchange market and derivatives market. Now the question that will come to your mind is, what is capital market and why it is different from money market? I'll first segregate money market so it will be easy for you to understand capital market. Money market has no birthday. It's a very simple way to remember. Money market, maximum duration of any instrument is 364 days. It does not celebrate a birthday. So that means anything which is less than 1 year is money market. It includes treasury bills, COD, certificate of deposit, call or notice money, commercial papers, even you can say repo agreements. Then now the question is, if money market is less than 1 year, what is capital market? By itself, it is very clear, anything which is long term. Anything which is long term, that is capital market. So money market talks about short term and capital market talks about long term. Capital market we divide into two parts. One is a primary market, another is a secondary market. Primary market, as I told you, that here if an unlisted company comes in, it is IPO. If a listed company comes in, it is FPO. IPO is initial public offer. Then what is FPO? Follow-on public offer. And please remember, why we call it primary? Primary because company and stakeholders have direct relationship. Investor and company have direct relationship. When I pay Bajaj Housing Finance directly, it is primary market. There is no intermediary in between. Company investor direct relationship is primary market. Then what is secondary market? Where there is someone else involved, and that someone else is stock exchange. Our securities are listed there. Secondary market has two parts. Debt market, which is obviously more than 1 year, and equity market. So please remember this. If anybody asks you, what are debt market securities? More than 1 year. Then what are money market securities? Less than 1 year. Maximum duration 364 days. So secondary market is debt market and equity market. Equity market. What is equity market? Equity market is a market which is listed in India. Which are those two stock exchanges? BSE, Fountain, Fort, Dalal Street, NSE, BKC. What is FX market? Foreign exchange market. We will be discussing subsequently. And derivatives market. So basically, financial market has quadrilateral components. Financial participants, how many? Pentagon, 5. Financial markets, how many? Quadrilateral, 4. Capital market, money market, foreign exchange market, and certainly derivatives market. We now move to third component of that, financial instruments. Now this is very, very important. And please remember this. When you need money, money will come against issue of something. And that issue has to be definitely in form of certain securities. That security can be equity. That security can be debt. That can be instruments of derivatives, and there can be forex. Equity, we have preferred shares, which are also called preference shares. Equity, which are also called ordinary shares or even common shares. We also had a third type, which are now getting delisted due to a little unpopular situation for them. They are also called DVR, differential voting rights. And which company delisted it recently? Tata Motors. They had two types of shares, Tata Motors Equity, Tata Motors DVR. DVR are delisted from 1st September 2024. Come to debt markets. The instruments are loans, debentures, bonds, government securities. In derivatives, we have forwards, futures, options, swaps, and nowadays in US and UK, very, very popular, swaptions. Swap plus options. Come to Forex. We have non-deliverable forwards, that's what NDF is, which we'll be learning subsequently. Forwards, futures, options, swaps. Here, swaptions so far not very popular. Then there is financial regulator. Like how we have principal in schools and colleges, here also we have regulators. Please remember this, if there are no regulators, then you know what can happen. And all of you are aware of, even regulators are nowadays regulated. 2023, 23rd January, when we all woke up, we saw Hindenburg alleging on Adani. In 2024, the same Hindenburg attacked SEBI. So, please understand, even regulators are regulated. Even regulators face allegations. They are not immune. They have to answer. And regulators are in banking, insurance, stock exchange, pension funds, anti-money laundering. In banking, we have a regulator which is called RBI, Reserve Bank of India. Insurance, we have IRDA. Stock exchange, we have SEBI. Pension funds, we have PFRDA. Anti-money laundering, worldwide there is one watchdog, FATF, Financial Action Task Force. But let me be a little more in-depth to understand this, that if I talk about regulator in America, US, it is for banking, Federal Reserve Board, headed by Jerome Powell. And we all look forward to Jerome Powell, who recently cut 50 basis points on 18th of September 2024. And that sent markets up, and in North Star direction. Indian markets up, US markets up. Indian markets, as in September 2024, crossed 85,000 Sensex. Sky's the limit. So when they say Jerome Powell's one statement changes the game. When America sneezes, India catches cold. छींकता अमेरिका है और ठंडी इंडिया को लगता है. But that is applicable to entire world. Because America is the largest economy of the world. Please remember this. Largest economy. Doing wonders. Doing wonders. And America has always led from the front. If you look at the largest stock exchange of the world also is America, and largest economy of the world is also America. Moving ahead, we have financial services. If you are going to invest, it is called fund-based. If you are going to advise, it is going to be called fee-based. Fund-based includes leasing, mutual funds, housing finance. Fee-based is advisory. It includes broking, portfolio management, advisory services. So, please remember that in financial services, we have fund-based and fee-based. Fund-based means capital. Fee-based means, here, please understand that when we talk about fee-based, it is advisory. Here you don't invest anything. You just invest your services and time. Here you give advices. And largest of the companies of the world have made tremendous amount of money in advisory services. they have become very popular. Now we move to a term called financial market. Now when I listen to word market, as a child I used to remember that where goods are available for sale or we purchase it. Financial market is a place where obviously there are no goods, it is money and money related things. So how will I define it? A market where financial instruments are traded in order to raise capital. A market where financial instruments are traded in order to raise capital. Traded, what is traded? Ye sawal important. Traded means where buying and selling takes place. Trading is a word you should all know. So that's a place where financial instruments are purchased and sold. It is all again about simple economics. What is simple economics? Demand and supply. Please remember the simple rule of demand and supply. Higher demand, higher price. Lower demand, lower price. Higher supply, lower price. Lower supply, higher price. This is very, very common and please understand this. Market also cannot be isolated from principles of economics. Principles of economics are very, very clear that here you require clarity. That if a particular stock is in high demand, Reliance in August 2024, Mukesh Bhai declaring 1:1 bonus shares. If the shares will be in demand, price will go up. Opposite, Tata Motors declaring we are having lot of unsold inventory, stock will go down. So please remember this, markets also function on this principles. And the principle says very clearly that it's all about demand and supply. And remember this applies to all the markets of the world. So basically, if anybody asks me what is financial market, my answer is very clear, where financial instruments are purchased or sold. In short, traded. Why we require financial markets? क्यों चाहिए? If I want to sell something or buy something, I require a financial market. If I require a financial market to sell something, the biggest advantage is every seller gets a buyer. It means it creates liquidity. Now the question that will arise to you immediately in mind is, what is liquidity? What is liquidity? Liquidity is ability of asset to be converted into cash. Liquidity is ability of asset to be converted into cash. That is liquidity. That is liquidity. Remember this. That is liquidity. And that's where we will have to understand. So this is one function. Then there is also, as I told you, demand and supply principle, price discovery. Means higher the demand, higher the price. Lower the demand, lower the price, vice versa. Nvidia fell because of high supply. Tata Motors fell, high supply. Reliance increased, high demand. So basically, the second function of financial market is price discovery. Third factor, which is very, very important in financial market, is accessibility. Now that is very much required. If I want to sell shares, I want to issue instruments, there should be accessible markets. Which is the world's largest stock exchange? All of us know that, America, NYSE, New York Stock Exchange. But do you know which is the world's smallest market? It is an island next to Australia, Papua New Guinea. How many stocks are there listed on that? Only 13, 1-3. Now, how can I say that's an accessible market? It's very difficult. That island has highest business of coffee, but unfortunately, the stocks listed are only 13, 1-3. And if I look at our own exchanges, BSC, NSC, 5,000 plus securities listed. So understand this, accessibility means I can buy easily, I can sell easily. If participants are comfortable, then only they will trade. And financial market gives that accessibility. It is there with all of them, all the stakeholders. So that is why when we engage in trading, investing or fundraising, we need that accessibility. That's the reason why you see volumes. What is the cash volume of NSE? 2 lakh crores. Is that small? Not at all. So that's how it is moving. That's how it is moving. The next most important thing of financial market, the fourth feature is market transparency. If there is transparency about prices, transactions, relevant data, what will happen? It will give tremendous amount of confidence to investors. Remember this. Investors will start trusting. Which was the hedge fund which shook the life of two Americans, Rajat Gupta and Raja Rajaratnam, and there was lack of transparency in the transactions. Both of them ended up in jail. Owner of hedge fund Galleon Securities was Raja Rajaratnam, and Goldman Sachs CEO Rajat Gupta. There was some exchange of inside information. I will recommend to all of you, read those two books written by both of them. Unfortunately, when they were jailed. Rajat Gupta has written a very good book on market transparency, Mind Without Fear. What has Raja Rajaratnam written? He has written on markets, why the justice was not proper, uneven justice. Read those books. Why market transparency is required? What happened here in Harshad Mehta? What happened in Ketan Parekh? What happened in Ramalingam Raju, Satyam Computers? What happened in Lehman Brothers? Please understand this. Investors put their hard-earned money not to see them drowning. Can we afford to lose money? No. People who invested 1 lakh rupees in Reliance in 1977, the birth year of Reliance, where have they reached today? Somewhere 1.54 crores, not bad at all. Not bad at all. But if you see Microsoft, same year it is born. Microsoft and Reliance are born in the same year, 1977. How much that 1 lakh rupees in Microsoft went to Indian currency? 3.76 crores. Double than Reliance. Please remember, higher the transparency, higher the returns. But long run mein. You can't expect markets to give you returns immediately. What is the tagline of NSE? Soch kar, samajh kar, invest kar. Please understand this. Moment you lose that momentum, transparency is gone. And if transparency is gone, you cannot make it up. People who lose money are more of in a hurry to make money. Please understand, slower you are, higher the returns. Now it's up to you. You want to be a tortoise or you want to be a rabbit. It's totally up to you. Then there is regulations and oversight. You require government authorities to regulate. We have SEBI, we have RBI. And please remember, they protect investors, they maintain market integrity. People think they don't, but they do. There was a very good article in Economic Times, From Kid Gloves to Sucker Punch. What was that article about? It was stating that how IIFL gold loans were banned by RBI. Recently, now of course they have lifted the curbs in September 2024. How RBI gave a punch to Kotak Mahindra by not allowing them to issue credit cards for 1 year and online accounts for 1 year, 811. How RBI punched JM Finance by stopping their IPO financing. SEBI then stepped in and banned it. How RBI acted on HDFC Bank in 2022. How RBI banned Bank of Baroda, government bank, from issuing online accounts for 3 months. This is called From Kid Gloves to Sucker Punch. Don't underestimate the power of a regulator. When they act, it really serves as a punch. You all might be wondering why I am talking so much of regulations. The reason is, it is your hard-earned money. When you are putting your hard-earned money, understand that you need returns and safety. All of us are not putting money like Warren Buffett or Elon Musk or Mukesh Ambani or Gautam Adani. We are putting our money for making them grow. If they lose little money, it doesn't make difference. For us, it is budget, budget and budget. So please understand this. Regulations are required. Regulatory frameworks are required. When regulators act, we should welcome that decision. It is to protect our interest, investors' interest. It is all about investors. For SEBI, the prime motive is investors. All of us are reading in papers what is happening. How many people lose money? The latest reports in F&O says 93% people lose money. Out of 10, 9 traders lose money. So only one is winning? Yes, F&O is bleeding. 600 crores is the loss per year. 6,000 crores for 10 years. You look at macroeconomic picture. 6,000 crores of savings is gone from the system. 6,000 crores? Is that a small money? It's too big. Madhvi Puri Buch, SEBI chairman, says, I am worried. And she also opened up intraday trading Pandora's box. There we found more skeletons falling. 7 out of 10 people are losing money in intraday. So who is winning? 7 out of 10 losing in intraday, 9 out of 10 losing in F&O. What is happening? So who is winning? Investors. So be an investor. This is what is about transparency and regulations. You cannot afford to lose. Remember this. If you lose, you cannot make a comeback. And then you will blame your luck. That is not right. It is not luck. It is your mistake. You knew. Don't jump in the well with the searchlight, because there you will lose more. When you know the road is bad, stop there. What does Warren Buffett say about F&O? They are lethal weapons of mass destruction. Lethal weapons of mass destructions. And we believe in Warren Buffett, then why don't we believe in his quote? What does Mr. Rakesh Jhunjhunwala or late Mr. Rakesh Jhunjhunwala says? Dene wala bhi loser, lene wala bhi loser in F&O. Then who is winning? On record, I can say winning are 5 people. State government, central government, SEBI, stock exchange and broker. Broker gets brokerage, SEBI gets fees, stock exchange gets clearing fees, State government collects stamp duty, central government collects STT, securities transaction tax. Why will they stop that? Will they ban F&O? No. Did they ban cigarettes? No. They collect duties there. So will they ban F&O? No. F&O has nowadays become an addiction. Be very careful. Let's move to types of financial markets. You can see capital markets. You can see money markets. You can see quote-driven markets. You can see order-driven markets. Under capital markets, you can see primary and secondary. And basically, why it is called based on maturity, capital and money, as we discussed in our session. What is money market about? It is not having, or rather it does not celebrate the birthday. Money market maximum duration is 364 days. That's the reason why they are called short-term markets. Then what are capital markets? Long-term markets, more than 1 year. Capital markets, you have primary, you have secondary. You issue equity, you issue debt. You trade in equity, you trade in debt. Trading takes place where? Stock exchange. Which are the two stock exchanges of India? All of you know. BSE, NSE. Bombay Stock Exchange, National Stock Exchange. Just to inform you, so you can be, you must be knowing also, BSE is born in or established in 1875. It is the oldest stock exchange of Asia. World's oldest stock exchange is not BSE, remember this, it's Amsterdam. But BSE remains oldest stock exchange of Asia. And secondary markets have stock exchanges, so you can reverse also remember all the stock exchanges are secondary markets. All the stock exchanges are secondary markets, remember that. So now we can try to dissect here, and of course price discovery is about order and quote driven, but now we'll move to very quickly the terms like capital markets, money markets, forex markets, which is also called foreign exchange markets, or you know the short form FX markets, and certainly derivatives markets. When I look at capital markets, your concept should be very, very clear. The first thing that should come to your mind is long term. Capital markets means long term. Capital markets include two markets, equity and debt. Equity and debt. Here, there is raising of capital. And I would like to use a small word here, raising a long-term capital. And as I have told you before also in the session, when unlisted company issues shares, it is called IPO. Mind make them fit kar dena. But when a listed company issues, it is called FPO, which was one of the FPOs of telecom industry in 2024. V Mobile, or you can say Vodafone Idea. It's nowadays in news for restructuring, plus its owner Kumar Mangalam Birla making a big investment in Vodafone Idea. Please remember this. And why I'm giving you these examples is to correlate what is happening in current markets. IPO, bahar aayi hai. There is a flood in India for IPO. You can say monsoon is everywhere, but monsoon is there even in primary market. You saw Ola Electric, you saw Bajaj Housing Finance, you saw Resource Automobiles, you will see Hyundai Motors. And again I remind you, Hyundai Motors will be the largest IPO till date, once it is issued, 25,000 crores. At present, the largest IPO remains LIC of Government of India, 21,000 crores. It will be taken over now. But Hyundai Motors will not be fortunate to remain in that position because there are large number of companies lining up after that. One is Isha Ambani, Reliance Retail, Anant Ambani, Reliance New Energy, Akash Ambani, Jio Telecom, Jeet Adani, Adani Capital. So there are number of IPOs lined up, and these will be definitely of large amounts. Tatas have few: Tata Play, Tata BizBasket, Tata Autocom, Tata Advanced Technology, Tata Aviation. And aviation means they are with Boeing making aeroplanes. So amount of IPO will be large. And Tata may become one of the first companies which will be involved in making of planes and certainly flying of planes. It is an airlines, all of you are aware of, Air India, Vistara. Now merger is taking place from 12th November. Air India and Vistara will be one, all will be called Air India. So coming back to capital markets, please remember raising long-term money. Please fit in that mind. Raising long-term money by issue of what? Equity and debt. Now the question that comes to your mind is why? CapEx. CAPEX. Capital expenditure. This is long-term. This is long-term. Capital markets contribute to long-term investments. So when they contribute to long-term investments, they look for economic growth. Why economic growth? When you create a situation by raising money, you are actually simultaneously creating jobs. You are creating jobs. When you are creating jobs, please remember this. Standard of living of people increases. So how? You are putting salary in their pockets. How easy it becomes for them. That's the reason we welcome investments. Remember this, more you see the headlines of IPOs, FPOs, factories, these are good things. That are good things. Never ever like the headlines, which I don't like from last few days, is strike in Samsung in Sri Perumbudur, Tamil Nadu. That's not something which I am going to like, we are going to like, because that will not only stop the workers from working, but it will even derail Samsung from doing a good job. Please remember an economics proverb. When your neighbor cries, it is recession, but when you cry, it is depression. Remember this proverb very well. Please remember it is recession only, but since you are in trouble, you think it is depression. Recession means slow down. If Sri Lanka is not comfortable or Bangladesh is not comfortable, I am more uncomfortable. They are my neighbors. Stephen Covey in his 7th Habit says, if your neighbors are happy, you are automatically happy. This is not about competition, it is about cumulative growth. So understand this, that there are no opportunities if others create crisis. Yes, you can get temporarily, but you have to see that everybody is benefited. So when we talk about economic growth comes from employment. Employment gives standard of living. Standard of living how? Good salaries, good take-home pays. Why people talk Dubai, Dubai and Dubai? No tax. People earning 5 crores remain with 5 crores in Dubai. In India, your 5 crores become 3.5 crores. Why? Because 1.5 crores goes as 30% tax. Now this is something surprising. iPhone 16 is launched recently. If you look very closely, how much are you giving it to government? When you buy an iPhone, minimum you are giving 19,958 as GST to government. 19,958. Some people use mobiles of 20,000. That much you are paying as GST in iPhones. GST. This is government revenue. This is the exact calculated revenue given in Economic Times. 19,958. So imagine, and please remember this, if government wants more income, more spending, government will have to bring progressive tax, not regressive tax. Understand this. Capital markets grow with progression, not regression. So here coming back to capital market here, where I try to understand equity and debt, they raise for long term. And this requires tremendous amount of confidence of investors. Yes. When will I put money? I will put money when I will see opportunities. Why did US markets rise after Fed cut on 18 September 2024? 50 basis points Fed cut announced by Jerome Powell. Reason is because they see confidence. You will be surprised when Japan was declared to be in recession, Japanese markets rose. Uday Kotak, founder of Kotak Mahindra Bank, tweeted, "Welcome to new era where capital markets welcome equity rise by in recession." Recession में equity market बढ़ रहा है, it is increasing. Why? Money is shifting to equities. Still, Japanese people have confidence in their companies because now the interest rates are gone for a toss. Japan has slipped from third largest economy to fourth, giving place to Germany. India still remains on fifth. When India will surpass Japan, it will become fourth, and when it surpasses Germany, it will become third. So remember this in capital markets. In capital markets, remember one thing very clearly, that when we are talking about long term. We are talking about equity, we are talking about debt. But when we talk about money markets, the story is different. We are talking about liquidity, short-term money. Money where you are talking about maximum maturity of 364 days. It is all about short-term borrowing and short-term lending. It is all about period of less than 1 year. It is all about government trying to take money for short term. What and how, that we will discuss when we discuss money markets. Money market has its own role. When we talk about treasury bills, commercial papers, repo, certificate of deposit, call money, notice money, overnight money, weekend money. So now understanding here about capital markets. Long-term capex, capital expenditure is capital markets. You can see here why capital markets. It is not that money market is not important. It is not that forex market is not important. It is not that derivatives is not important. But capital market has its own place and own importance. So when we talk about capital markets, it is all about BDP. B, borrowing, D, deployment, P, profit. If I borrow at 6% from you and if I deploy in business at 10%, profit is 4%. 10 minus 6 is 4. So please remember this, when we talk about deployment, it has to be greater than borrowing. If that does not happen, you know what happened to Byju's, you know what happened to Kingfisher, you know what happened to the largest property firm of China, Evergrande, the first company of 2024 to become bankrupt. Please remember this. When our elders say that we should spend only that much which we have, जैसे हिंदी प्रोवर्ब है, जितना चद्दर है उतना ही पैर रखो. Same here applies to the companies. Moment you start overspending, who will save you? Who saved Kingfisher? No one. Will Byju's recover? No. And the biggest shock which we all got before a few days is Tupperware, US company, has filed for bankruptcy. 11 types of bankruptcy it has filed. Even though we are in India, we'll always wish that nothing like this happens, because please remember, whether it is US or China or India, such things are not acceptable. Moment bankruptcy happens, not only the company goes, please remember, companies, when they shut down, they also shut the doors of employment, shut the doors for tax revenue. I will always wish somebody comes up, pumps some money in Tupperware, and the company is saved or the company is taken over. See, please remember this. It's very, very important for company to go going. Market कभी रुकना नहीं चाहिए. If market stops, it will lead to recession, slowdown, bankruptcy, insolvency. All this is not required. What we require is progress, development, investments, savings, higher GDP, higher growth. That is possible with capital markets. We should be happy when we read the titles IPO, boom there. In India, what 2023 companies collected, more than that in 2024, till 31st August the money is collected. So in 8 months, IPOs have collected more money than the money collected in 12 months. And what was the money collected in 12 months in 2023? 63,000 crores. What was the investment bankers' income there? 1,685 crores. Is that small money? Not at all. And the results are here to see. Morgan Stanley buying a property in Goregaon, renting a property in Goregaon next to Oberoi Mall with a huge rent of 16 crores. To be exact, 15.89 crores per year. क्यों करते हैं invest? They invest because they see fantastic growth in capital markets of India. Nomura investing heavily in Powai in Mumbai. MUFG taking over Link Group. Look at the way things are happening. MUFG, the Mitsubishi Bank, the owner of Nintendo Switch, have applied for bid to buy Yes Bank, have applied for a bid to buy IDBI Bank. Why are these companies interested in India? Because growth, growth and growth. Please remember, whenever deployment in India is greater than borrowing, you will see times changing. So when you see investments and economic growth, capital markets is providing a platform. It provides platform to government, it provides platform to private companies, private sector companies, public sector companies. And economic growth leads to job creation. Job creation leads to improved living standards. So please remember this. GDP can grow only if there is proper investments. Understand that. That's required. That's required. Let's move from that point to next point, long-term financing. We already discussed capital market is about long-term. They offer long-term financing options. We issue bonds, we issue equities. And when we issue them, please remember that it gives you significant time to generate returns. Significant time, it is required. Long-term is the only answer. Again, I remind you of NSE, सोच कर, समझ कर, invest कर. Please remember this. If you follow the rules, you will not have to worry. And if you are breaking the rules, you should be a worried person. So please remember, make a rule for yourself. Write in your diary or a notebook that you will always be there for long term. Capital markets provide you opportunities. Third point which says is efficiency and competition. Competition between companies. You see cement struck companies having tremendous competition. Competition it is between the two largest industrialists, Kumar Mangalam Birla Ultratech and Gautam Shantilal Adani in Ambuja Cement, Penna Cement, then there is ACC Cement and now Sanghi Cement. Gautam Bhai is likely to consolidate more. He has made his intentions very clear. I have $6 to $7 billion appropriated for merger and acquisitions. Adani is on shopping spree. That's what makes capital markets more attractive. And Kumar Mangalam Birla has also bought stake in India Cements. That way, probably in long run, he will be owner of Chennai Super Kings. And that's the entry Kumar Mangalam Birla makes in IPL. It's a very big coincidence that his son left Rajasthan Royals and joined Birla Group, Aryaman Birla. And he is buying an IPL team. He was not buying an IPL team till now because his son was an IPL player. He was a cricketer, Aryaman Birla. But on father's call, he said that here is a time for India to grow. My father needs me. On his Instagram, he wrote, I quit cricket. Kumar Mangalam Birla's daughter, Ananya Shri, was a playback singer. She also quit playback singing and joined business of father. This is the power of capital market. Money is like magnet. Remember this. Money is like magnet. पैसा पैसे को खींचता है. Remember this. What does capital market encourage? Savings and investments. Capital market encourages savings and investments. How? It gives opportunities. It gives financial responsibility. When you get salary, when you earn money, naturally you appropriate that money. You put that salary in savings. That's how it is. That's how it is. So you put your money for use. And when you put your money for savings, naturally applying in IPO, applying in FPO, buying shares in market, making profit, selling them, booking profit, all this happens. So what culture is there in capital markets? Long term and converting that money for earning money. Money makes money. There's a wonderful book, Happy in Your Way, written by Yogesh Chhabria. He writes in that, send your money for earning in your lifetime to have a good life. Because how you can do that? The products which you use are of public limited company. If you trust those products, buy the shares of those companies. If you are having Adani Power at home and you are satisfied with their services, I think Adani Power becomes a buy for you. If you are eating bourbon biscuits, Britannia becomes a buy for you. If you are regularly a movie buff and going to watch movies, I think PVR Inox becomes a buy for you. Please remember this. How you put your money to use is equally important. You may put your money in gold, silver, real estate, mutual funds, stock markets. But when you put that money to use, the most important aspect is returns. And as I told you, profit is the key word. Profit is the word which is liked by everybody. Those who have seen the serial of 1992, Pratik Gandhi, as Harshad Mehta, he says, एक subjects सबके अंदर common होता है, and that is profit. And I like profit. In fact, everybody likes profit. So please remember this. Capital markets have a big role to play. US, China and India have a long way to go together. And these three top economies, when they are together, I think it is very difficult for world to ignore them. I told you that in beginning, UCI. If it is not, you go to ICU. Then there is foreign investment. Capital markets definitely attract foreign investments. It can be FDI or it can be FII. FPI generally, if they stay for long term, then yes. If they are for short term, then obviously you can't regard that. What is FPI? Foreign portfolio investment. What is FII? Foreign institutional investors. What is FDI? Foreign direct investment. These are the things. And when foreign investment comes in a company, naturally, your company's stature, goodwill, everything grows. It's very important to be important. Remember this. So when we talk about foreign investments, it really makes your company grow. It really makes your company feel very important. And foreign investments, when they come, they also bring with them a lot of investors, a lot of goodwill, and that increases volume of your shares. It automatically becomes important. So capital markets having foreign investment, it will do wonders. Remember this. It will do wonders. Then I come to the next point is price discovery. When I talk about price discovery, again here I remind you of the principle of economics, demand and supply. Higher demand, higher price, lower demand, lower price, higher supply, lower price, lower supply, higher price. Nvidia lost, Tata Motors lost, Reliance gained. Why did Nvidia lost? Artificial intelligence is overrated. The report came in one day it lost 9%, $270 billion. Tata Motors, high inventory, lost around 100 rupees of stock price. Reliance gained, declaration of 1:1 bonus shares. So price discovery is based on the information. Under capital markets, there are two markets, primary market and secondary market. We need to discuss primary market first. I always call primary market NIM. What is NIM? New issue market. Primary market is also called new issue market. And when unlisted company issues shares, it is called IPO. When listed company issues shares, it is called FPO. Now coming back to what are they issuing? Shares, bonds, other financial instruments are issued directly to the investors. Primary market, remember the relationship, it is between company and investors. It is between company and investors, investors and company. Direct relationship. Nobody else in between. It is just company and investors. Then when we move ahead in this, what does primary market help in? Capital formation. It also helps you in long-term capital expenditure. It helps you in expansion. It allows you to raise capital. There is growth. And please remember this, when IPOs and FPOs are coming, one thing is very, very clear, and that is economy is growing. Remember this, economy is growing. What if I read some scams, etc.? See, please remember this. All IPOs are not scams. All FPOs are not scams. And that is the reason why we have regulators. In fact, 2023 and 2024, if you visualize clearly, or you can check on Google yourself, you can see IPOs have benefited the investors. People have earned capital market, money in capital market. Paisa banaya hai. And that's very important. If you make good amount of money. In fact, SEBI has surveyed and said that many people have sold on profit on listing प्रॉफिट करके लिस्टिंग पे शेयर्स को बेच दिया है. People have made money. So primary markets are oxygen for the economy. And one thing, when primary market is growing, it means economy is doing well. If stock markets are barometer for the economy, primary markets are life of the economy. Remember this. So please understand that. Never ignore the primary markets. Yes, if primary markets are slow, then probably you should think that. In US and China, IPOs have slowed down. We are worried on that. But have they slowed down in India? No. In India, every week, 4 to 5 IPOs are coming. Every week, there is flood. I told you before also, there is monsoon in IPOs. And it's raining. Let's understand also what is secondary market. Secondary market is a place where there is buying and selling of shares, trading of shares or securities. Secondary market comes after primary market, hence secondary market is called aftermarket. Secondary market includes stock exchanges, Nasdaq and NYSE in US, Shanghai and Shenzhou in China, NSE and BSE in India, Stock Exchange of Japan in Japan, and Germany Stock Exchange in Germany. Just telling you a few of that. The top 4 countries in stock exchanges are United States, then there is China, then there is Japan, and then there is India. India recently overtook Hong Kong to become the 4th largest stock exchange of the world. And you know how fast India adds 1 trillion? Only 117 working days. That's the time it takes. Only 117. Sirf 117 working days? Yes. At that pace, India will definitely overtake Japan very soon. So you can imagine the growth which India has. Crossed 85,000 Sensex. Is it less? Not at all. It's doing wonders. It is doing wonders. If you see the forecasted predictions, forecasted ones, 1.5 lakhs Nifty and 4.5 lakhs Sensex, we are talking about a huge Indian capital market. So please remember this. In secondary market, which comes after primary market, it provides very important role in liquidity, buying and selling, price discovery, and of course, continuous trading opportunities. Secondary market gives fantastic returns. But what happens if market falls? Now, fall is imminent when there is a fantastic rise. Remember Newton's law of gravitation, what goes up comes down. So take it as a correction. Don't think market has crashed, it's all over. There is never everything going to get over. In COVID times also, secondary markets were at discount. When shares like Tata Motors were available for 66 rupees, Reliance was available for 700 rupees. Somebody had WhatsApped me and said, it's a big bazaar discount sale. Incidentally, there was a Wednesday when he WhatsApped me. I replied also, yes, Big Bazaar does have a big sale on Wednesday. That time Big Bazaar used to be there. Now Big Bazaar is not there. It has now become Reliance Smart Bazaar. It's taken over. So please remember this. Markets, whenever they fall, they give you opportunities to enter. And whenever they rise, they give you opportunities to book profits. It's all about markets. It's all about markets. Money, money, and money. Remember this. So this is about primary and secondary market. Remember this. Primary and secondary markets. And as I told you, the 4 countries which lead the world in markets are US, China, followed by, then you can say the third number is Japan and India. That is all about it.
Really,
As we are discussing capital markets, we also need to understand what is order-driven and quote-driven markets. Order-driven, quote-driven. Order means quantity. Quote means price. These are two different markets. Don't mix them. Order-driven markets are clearly where buyers and sellers display the price and quantity which they wish to buy or sell. Buyer means bid, seller means ask. And when we look into that quotation of order driven, it is called market depth. Market depth. How many quantity buyers and what price? How many quantity sellers and what price? Buyers and sellers trade with each other without the intermediation of dealers. The biggest feature of this market is buyer and seller don't know each other. This is formal, disciplined market. Naturally regulated, discipline means regulated. Best example is BSE, NSE, NASDAQ, NYSE. These are the markets where you don't find counterparties known. Counterparties are unknown. Do I know whom I am selling? Do I know whom from I am buying? No. Regulations are there. And regulations make it compulsory. And why you should know who is buying or selling? That is not possible in exchange regulated markets. And if that is so, regulator will levy a fine. And please remember, regulators are very, very active. So please understand that confidentiality is the key to the order-driven markets. You can say that best bidder wins. You can also call that, they are also known as auction markets. Highest price, you are the winner. But please remember, what is price? Price means consensus. You should agree. Buyer and seller should agree. Buyer and seller should agree. That is price. That is price. Try to understand here that if buyer and seller don't agree, how will the price come into existence? If I say I want Tata Steel for 153 and you say you will sell it for 154, this is not a deal. Yes, obviously not. There is no consensus. When I say I need 153.5, you agree to come down to 153.5, that's a deal. It's a done deal. So understand that. Understand that. Price is called consensus agreement between buyer and seller. Price cannot be forced upon. You can't do dadagiri. You can't dominate. No. And please remember, order-driven markets are also called formal markets where counterparties don't know each other. You can see here, that's what market depth I am showing. This is fantastic transparency. You are seeing the order book here on the display. By quantity, this is bid 1225 at 187.3. Another 800 quantity 187.25. 5 shares 187.2. 50 187.15, followed by another 50 187.10. Total bidders, total buyers 113,616. Sellers, seller is asking 20 paisa more, 187.5, but he is supplying only 100 shares. At 5 paisa extra, you get 866 shares. Another 5 paisa extra at 187.6, you get only 1 share. At 187.65, there are 2010 shares available. At 187.7, there are 4,001 shares available. Seller quantity available is 4,12,341. Quantity supply is higher. Do you think buyer will raise the price? No. He will wait for the seller to come down. Why? Supply is higher, demand is lower. Supply is 4,12,341 shares. Demand is 1,13,616 shares. Try to understand this very, very clearly. Please understand this, that this is what the game is, demand and supply. This is the reason why you should always check market depth. Buying or selling is an art which requires understanding. And order-driven markets gives you fantastic transparency. The disadvantage is liquidity. Why? I don't guarantee you that you will buy the share. Suppose you said today you want to buy Reliance at so and so price. Example, 3,100. And Reliance is 3,200 or 3,150. I cannot guarantee you. I will put the quote. That is allowed. But if Reliance doesn't come down to that price, how do I guarantee? Opposite. You say I want to sell at 3,250. But if the price, it doesn't reach there, how can I sell? I will put the quote, but it will not be successful. So order-driven market gives you transparency, but cannot give you guarantee. Your order will be executed, no guarantee. And this is the beauty of order-driven market. It tells you facts. We don't live in fiction. Please remember, that's very important. Success of an investment or capital market lies in truth, in honesty. Because if the base foundation is fake, how can you survive? Can you actually say, nahi, ho jayega? No. There's a very wonderful book written by a very good author. It's available everywhere online, Jugaad. It means you adjust everything. That Jugaad is not possible in order-driven market. Order-driven markets is not for Jugaad. That book is written with reference to India. That's why I'm clarifying it. Jugaad is not possible in order-driven markets. Here is Jugaad, quote-driven markets, where in fact counterparties are known, and this is where the Jugaad happens. Because you know each other. These are OTC markets. A market in which prices are determined from bid and ask provided by market makers. Market makers are investment bankers. They'll say, okay, we are doing a deal, 1 lakh shares, and here it is, and this price. And buyer and seller agree. And there is guarantee of order execution, because this is not order-driven market. This is quote-driven market. Mark my words, I am changing it. Quote-driven market is also called price-driven market. It's a market which provides a bid to buy and ask to sell. Bid is buying, ask is selling. That's what I clarified also. What will market maker earn? The difference, the spread. And since the counterparties are known, this is also called OTC, over-the-counter markets. This is what about? You can see here, foreign exchange currencies, what you want to buy, you want to sell. In order, you only place the order. In quote, you can even quote and negotiate. Here you can't see the quantity. Here you are seeing the bid and ask. Bid means you are buying. Ask means you are selling. If it is from bank point of view, then Australian dollar, AUD is Australian dollar, oblique USD. So in this case, what happens is, the bank is saying if you want to sell odd dollars Australian dollars to us, you sell at 0.9153. If you want to buy from us, you pay a little more, 0.9156. What is the bank's profit? See the difference? Ask minus bid. Ask minus bid, 0.9156 minus 0.9153, 0.0003 per dollar. Quantity is very big. So they make good amount of money. Between order driven and quote driven, there is one more market creating its place, mixture of both, which is also called hybrid markets. Hybrid markets. Order driven are formal, quote driven are informal. Hybrid has both mixed. Certain scripts are available where there is a mixture of order driven and quote driven. That facility only is available at Nasdaq. You cannot have BSE, NSE here. Now let's sum up the differences between order driven and quote driven. Difference between order driven and quote driven. Order driven, first thing, it displays all the quantities and price, bids and ask. They give you quantity in depth, which is also called market depth. The only disadvantage is there is no guarantee of order execution. The biggest advantage is transparency. Price transparency is there. And I would say one of the largest advantages or the biggest advantages, counterparty is unknown. If you see here, let them display all the quantities and price. Let them give details of all the quantities of which your buyer wants to buy as a bid and seller wants to sell as a ask with price. And since there is a transparency, there is no guarantee for order execution. There is a large level of price transparency, but counterparty is unknown. कौन खरीद रहा है, कौन बेच रहा है, पता नहीं है. But if I shift to quote-driven markets, yeah, but there is no quantity, it's bid and ask. How much is the bid amount? How much is the ask amount? And where do they make money? Spread. What is spread? Again, remember this, ask minus bid. And remember this, all the economies which are healthy and solvent will always have ask greater than bid. Ask greater than bid. And when we say order, it will share the details, and biggest plus point of quote driven market is they give you guarantee of order execution. There is no price transparency, I agree. Because price नहीं बता रहे ना. But then they negotiate it. When they negotiate it, it is consensus. And that's where the OTC comes in picture. So if you want the order guarantee, trade in quote driven. If you want transparency, do it in order driven. Quote driven, one more point is counterparty is known. Counterparty is known. Now the summary of this financial system and financial markets is, where are we heading for at various levels? What are the risks in the market at present and what are the positives we take? Positives. US spending has gone up. China demand for steel suddenly has increased. India GDP is going up. IPO markets is raining. Japan is doing very well in innovations. Germany is trying to make its place again in various products, and plus its markets are doing well. What are the negatives? We see slowdown in certain areas in China, and hence there are rate cuts in China. Second rate cut has come on 23rd of September 2024. 50 basis points rate cut is also done by US on 18 September 2024 by Jerome Powell, Federal Reserve Bank or Federal Reserve Board. Will India do that? India is waiting for inflation to stabilize. India is fighting the pot, P-O-T, very badly. Pot is P, potato, O, onion, T, tomato. Potato prices have spiraled by more than 200%. 20 rupees potatoes are available at 50 rupees per kilo. Onions of 20 rupees are available again at 50 rupees kilo. And tomatoes, which are generally available for 20, hit 100 rupees. So you can see the pot is boiling. And please remember, in any financial system, interest rate cuts are not welcome till inflation is stable. Food inflation is very high. India being an agrarian economy, the financial system of India depends on agriculture. And what we know is there has been a very, very heavy rains in Uttarakhand. It has destroyed crop of apple. Apples will be very expensive in next 1 year. Same struggle is happening in various states. Gujarat witnessed unprecedented rainfall. And plus remember this, any economy to grow requires peaceful neighbors. All of us know Bangladesh unfortunately went through civil unrest. Sri Lanka just came out of bankruptcy and is still struggling to make payments of loans. Pakistan has been in economic emergency. China is in slowdown. Myanmar has a military emergency. Afghanistan is passing through the Taliban phase. Bhutan is a very small economy, $2 billion economy. Our Gujarat state has $8 billion, Maharashtra has $15 billion. Where is Bhutan? It's a country. Nepal has just recently witnessed a change in Prime Minister. Please understand this. I need to pray God that my financial system will be strong if my neighbors are okay. Understand this. System cannot work in isolation. We cannot work in isolation. India has 7 neighbors and 1 water body. Sri Lanka is a neighbor. You can't ignore. You can't move ahead unless you have a peaceful atmosphere. Financial system cannot grow in isolation. It requires very high degree of comfort and support. That's the reason why Warren Buffett says, and we'll understand that with that quotation, that if you want to grow, grow together. And I'll add here a quote of Ratan Tata. If you want to walk for longer duration, walk together, don't walk alone. So that is what about financial system is, and we will have a quick, and we'll wind it up here. Thank you very much.
Ready to conquer the world of accounting and finance? Like this video, subscribe to our channel and comment the concept you want to learn next.